There are over 4,800 currencies that have done this. I don't think this time is different, but I do think that this time it will be a globally coordinated effort, because when one country does it, it would be like a domino impact anyway. What happens when the governments request their gold back? That still lies in our future. We haven't seen that yet, but that's going to overwhelm. I could be wrong, but I think that that will absolutely overwhelm the market's ability to hide the truth. Yeah, you can't go by the price that on anything. I don't care what it is. I mean, do you really think that stocks at nosebleed levels, a true valuation of what is happening in the economy?
Recent shifts in financial legislation have drawn the attention of analysts like Lynette Zang, who warn that these changes may be less about modernization and more about engineering instability in traditional financial systems. By incentivizing the widespread adoption of corporate-backed digital currencies, the policies risk diverting deposits from conventional banks, creating a liquidity squeeze that hampers lending and economic activity. As commercial banks lose access to these funds, central authorities may feel compelled to implement aggressive monetary expansion to maintain economic stability. Zhang highlights that this cycle could inadvertently set the stage for hyperinflation, where excessive money supply diminishes the purchasing power of fiat currencies and forces investors to seek refuge in more reliable stores of value, particularly gold. At the same time, the official economic narrative often diverges from the underlying reality, masking the true extent of systemic fragility. Indicators such as soaring consumer debt, record-level credit delinquencies, and downwardly revised labor market figures point to vulnerabilities that are frequently underrepresented in headline data. According to Zhang, this deliberate obfuscation makes it increasingly difficult for individuals and institutions to assess risk, fueling distrust in fiat money. In such an environment, gold emerges as a critical hedge, a tangible, historically proven asset that preserves wealth when paper currencies falter, offering security against the distortions of manipulated economic statistics. Compounding these pressures is the growing instability in sovereign debt markets, where declining foreign investment forces domestic institutions to assume a greater portion of obligations. This rising internal burden undermines confidence, creating a self-reinforcing cycle of uncertainty, withdrawal, and market volatility. Zhang emphasizes that as the reliability of traditional financial instruments erodes, gold stands out not only for its intrinsic value, but also as a global benchmark for wealth preservation. In times of systemic fragility, tangible assets like gold become indispensable, providing a safeguard against both monetary devaluation and the cascading effects of debt market disruptions. Before we dive into Lynette's sharp insights from her latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Of course it is. That's spot on, Jeremy. It is always the paper market because that's just a trading market.
Yeah.
And since you and I spoke, look at how much of the physical market, because in the US, it's primarily just a digital market, a trading market. In Europe, it's been more of a physical market, but look at how much of that physical market was, and I'm going to use the term because I think that's what happened, repatriated back to the US from especially the Bank of England. And since it wasn't the Bank of England's gold, because they're not sitting on a whole lot of their personal gold, but they are sitting on a whole lot of other sovereign gold from countries around the world. So what gold did they ship over here to us? I'm thinking it was, and maybe I'm wrong about this, but I'm thinking it's a lot of that sovereign gold. What happens when the governments request their gold back? That still lies in our future. We haven't seen that yet, but that's going to overwhelm. I think, I could be wrong, but I think that that will absolutely overwhelm the market's ability to hide the truth. And yeah, you can't go by the price that on anything. I don't care what it is. I mean, do you really think that stocks at nosebleed levels are a true valuation of what is happening in the economy? Because if enough governments request their gold back at one time, and we saw this a little snicker snack taste of it in 2014, 15, in there with the sovereign debt crisis in Europe. And a lot of countries at that time repatriated and asked for their gold back. And even the Federal Reserve of New York, when Germany asked for it, they said, okay, you can have it, but it's going to take us, I think, 6 or 7 years or something. It didn't quite take them that long. They got it back before that, but they had to buy a lot of time. And I think it's much worse now. So that lies in our future, but you need to have the physical metal in your possession, because if you don't hold it, you don't own it. Yeah. And if a government needs to do an overt confiscation in order to make that happen, they will. And if it's sitting in a retirement plan or something like that, where you're not holding it anyway, that's where most of it is in the US. Most of it's not held privately. Well, you're going to see that kind of explosion. And the truth will begin to express itself. It's not going to fully go there to its fundamental value yet. Yeah. That happens when they're attempting to regain confidence. Well, I don't think so. I mean, it doesn't for me personally, because I understand the true value of an ounce of gold, and I also understand its full functionality. Mm-hmm. Now, if it didn't have that full functionality, then I would have to say yes, because there would be no other way to accurately, ultimately value the gold and its importance in the market. And what I mean by that, because somehow Wall Street never really talks too much about how gold and silver are used in every single sector of the global economy. Mm-hmm. So you have the greatest functionality, but you also have the broadest base of buyers. When you're looking at trading contracts like we do here in the US, that's one area. And, the private clubs that you're talking about, it is really about managing perception. Yeah. That's what it's about. And so there will be a rise, because there always is. I mean, we've had over 4,800 currencies that do not exist anymore. So we have lots and lots of examples. And at the end of the day, central bankers will use gold to attempt to regain the public confidence. And that is when you will really see gold start to move toward its true fundamental value. And that's based upon, the amount of debt that's been created, because this is money. This is fiat money. This is sound money. Mm-hmm. They're both money. They're just the opposite side of the coin. This is used in one place. This is used every place. Yeah. So what will ultimately happen as loss of confidence in not just dollars, but that would be true euros, yen, all of them, right? Loss of confidence in the fiat money system will drive the value, not the value, but the price of this, the visible price of this to its true fundamental value. But it will not happen until governments are forced to attempt to regain the public confidence. Yeah. I mean, do you really, if their job is to lie, do you suddenly think in this one little area they're going to tell the truth? Maybe it's more truth because we are watching them accumulate, global central banks, meaning accumulate more gold than they ever have historically in the last 3 years. We also have central banks, especially the Federal Reserve, that are running losses. And I believe we are now in the 4th year of losses for the Federal Reserve. That's unprecedented. That has never happened before. Because how do central banks make their money? Does anybody ever ask that question? And it's actually pretty simple. It's seigniorage, right? It costs, well, this happens to be a $10 bill, but if there's a $100 bill, here's one, okay? It costs 9.4 cents to print a $100 bill. less to push a button and create it. Now, you and I have to work 100 times harder for this, but that difference between the cost of creating that money and the face value of that money is central bank income. And that's what they use to fund their operations. And whatever they don't use up in a year goes to the treasury. And so we are now in the fourth year of massive losses at the Federal Reserve and their inability to transfer any of that excess to the treasury. But look at how much new money they've created. Why are they in losses? The losses on what they're sitting on all of that debt that they bought at ZERP? But that's a little scary, especially as this whole situation begins to expand and more debt is piled on. And you've got the corporations that are now issuing these stable coins, buying this debt. What happens when they have to sell it? These are not entities that are there solely to support these markets.
Lynette Zang has repeatedly highlighted how banks remain deeply enmeshed in speculative practices, with derivatives and other complex instruments representing exposures far beyond the tangible assets that support them. According to Zang, these high-risk positions, often hidden from public view, magnify systemic vulnerabilities, making the financial system increasingly fragile. A sudden market disruption or miscalculation could trigger cascading failures far surpassing previous crises, leaving paper-based assets and digital instruments exposed to severe losses. In this environment, Zang emphasizes that traditional stores of value, particularly gold, emerge as a critical safeguard, offering security independent of institutional stability and resilience against widespread market shocks. Building on this, Zang underscores the growing importance of tangible assets in preserving wealth. Unlike digital currencies or fiat money, physical gold retains intrinsic value that cannot be manipulated or artificially inflated. Investors, she notes, are increasingly turning to gold as a hedge against inflation, currency devaluation, and systemic financial collapse, recognizing its enduring reliability in times of economic uncertainty. In a world where engineered shocks and opaque financial practices threaten stability, Zhang's analysis reinforces that securing tangible, universally trusted assets like gold is not merely a strategy, but an essential step for protecting long-term financial security and ensuring a stable store of wealth.
Well, historically, yes, the good thing about at least the data up to this point is that if through the Bureau of Labor Statistics, the BLS, I can go back and I can pull a food basket, then it's the same food basket, right? So I pulled it from 1913 to the last one I did, 1925, I mean, a couple months ago. And that food basket, and even though the BLS's numbers are sketchy, okay, they're what I can use for consistency's sake, right? So that food basket had gone up something like 2,500% over that time frame. Spot silver, manipulated as it is, was up about 3,000%. So that's why I say it maintains your ability to buy that same stuff. Spot gold, manipulated as it is up over 16,000%. So not only does it maintain your ability to buy the same goods and services, it actually expands your ability. Neither one of them reflect the true fundamental value because a rising gold price as the primary currency metal would reflect, it does reflect the falling purchasing power value of the currency. So governments have to keep it suppressed because they don't want you to understand what's happening, because then again, you would make different choices. However, as confidence in the dollar is lost, then, or any currency is lost, then people are trying to figure out what they have to do to maintain that. So primary currency metal, and this is also the metal that they do these overnight resets. They do it against gold as the primary currency metal, which is indestructible, which is one of the reasons why it is the primary currency metal.
Mm-hmm.
Silver gets used up in manufacturing, so it is the secondary. And, I get a lot of questions on the gold to silver ratio. And initially, here, this is my 20th of an ounce, $1 gold piece. I think you can see how teeny it is to an ounce of silver. So this is the original. And that gold silver ratio, I'm sure we will see it grow more narrow for a period of time. But as the hyperinflation kicks in and people become more aware of it, then what happens is it expands again. So gold really does protect you much better in every circumstance, frankly.
Yeah.
And one way that the individual can test this on their own, regardless of what I say, is go into any currency exchange website. I happen to use xe.com, but you can use anyone and they're free. So you go in there, pick a currency, any currency, and they have it as shorter term and it goes out, the one on XE goes out to 10 years. So that's as far back as you can go in there. But you put in the currency that you want to look at and put in against US dollars, because the dollar still is officially the world reserve currency. Put in spot silver for that same period of time. Put in spot gold for that same period of time. One thing you will see, I've seen it 100% of the time, is that spot silver and spot gold always outperforms the spot dollar. And then I'd say probably about 9.3% of the time, spot gold outperforms spot silver. But I have seen that flip-flop a little bit. And it's usually by a very wide margin. And so for me personally, spot silver is my choice for my barterable portfolio. So this is what I would take to the gas station. This is what I would take to the grocery store. Actually, I'd take probably more dimes to the grocery store because it's easier to put 2 dimes together than I'm not able to break that in half, right? So I like silver for my barterability, and my personal barterable portfolio for myself and my 2 daughters is 10 years worth of barterability. And we have it all defined in our sound money strategy. And then I have barterable, which fractional raw gold for things like property taxes or chronic illnesses or paying off a mortgage or things like that. So by a wide margin, my investment portfolio is in the collectible coins because it was just tested recently when the world thought that we were going to impose 39% tariffs on imported gold through Switzerland. Yeah, what was it? It was the bars. It wasn't collectible coins. It was bullion. It was monetary gold. So I believe that it has a level of protection since the U.S. has a history of confiscated gold. We've done it 3 times. So to me, that sets a historic precedence. And even though they backed off from those 39% tariffs, because that's what they do, right? You dip a toe, you see what the reaction is. Do I need to pull it back, or can I keep going further and further and further? So that's, I believe, what it was. But I love the fact that it tested the monetary gold and not the collectible gold. That was great for me because it was, for me, another element of proof on how I can keep my gold and use it in the normal marketplace to expand my wealth base into income producing assets that I can't outlive, and my children, I can pass it down as a legacy to my children. That I'm an ex-banker and an ex-stockbroker, and I consider myself a technician. So I believe I can read the technical language of the markets, but I am not a short-term trader. And I don't buy in to the lies. I just don't. Yes, I personally do not own any stocks or bonds or ETFs or mutual funds or annuities or any of that fiat money garbage because I am crystal clear that we're at the end of this currency's life cycle. And once they've gotten all the purchasing power, which essentially they have, then they must attack principle. And that's what's coming up next. And so, yeah, you got to I am in safety. And
Okay.
it's not just gold and silver. It's also food, water, energy, security, barterability, wealth preservation, community, which is arguably the single most important part of the mantra, and shelter. Because these are the things that we need to lead a reasonable standard of living.
Mm-hmm.
And this is what I talk about all the time. Local community to create surety in all of those 8 areas, global community to create sound money in the system and sound money is simply this. It is gold and silver that because it's used in every area of the economy, governments and central banks cannot inflate away. It is above them. That's where you need to be right now in absolute safety.
Looking ahead, the global financial landscape faces a period of heightened uncertainty, with the potential for sharp disruptions in both traditional and digital markets. As confidence in paper currencies erodes under mounting debt and persistent inflationary pressures, tangible assets could experience a dramatic surge in demand. Investors may flock toward commodities with intrinsic value, such as gold and other precious metals, as a hedge against currency depreciation and systemic risk. This shift could trigger a repricing of assets worldwide, elevating historically stable stores of value to unprecedented levels and fundamentally altering the balance between speculative and secure investments. In parallel, financial institutions may struggle to maintain liquidity as the public increasingly reallocates wealth toward assets that cannot be created at will. The resulting contraction in credit availability could slow economic growth, increase borrowing costs, and amplify volatility in equity and bond markets. In this environment, gold may not only serve as a protective hedge, but also emerge as a benchmark for wealth preservation, with its purchasing power rising relative to paper currencies. Over time, this could lead to broader recognition of gold's role as a foundation of financial stability, influencing both individual investment strategies and national policy approaches. With ongoing financial uncertainties and market fluctuations, do you see tangible assets like gold continuing to safeguard wealth, or will traditional and digital currencies retain their reliability? If this video provided value, please like, share, and comment below with your thoughts. Your perspective helps deepen the conversation and keeps everyone informed.